All right, so it looks like we're live. Welcome to My Credit Funding, our weekly live show. Now, just before we start, we're going to be talking about small business financing, some very interesting stats that just came out. Actually, it didn't just come out. This was actually done, I believe, in 2020 by Stats Canada. So I'm going to bring up those stats in a minute. Now, before we start, now, this is an educational channel. We focus specifically on helping entrepreneur and business owners on how to improve their credit, how to improve their business credit, their personal credit, so they can get more credit. They can get financing for their business to start their venture, to start their entrepreneur venture, to start their small business. So if you're a small business owner, or if you're planning to get into business, or if you are in business, you're looking for funding, you're looking for alternative funding sources, then subscribe to our channel. You can find us on Instagram, Facebook, and YouTube, right? So if you go to our Instagram, you just type in My Credit Funding, you'll be able to find us there. If you go to YouTube, you just search My Credit Funding, you'll be able to find us there. So now you want to subscribe because weekly, what we do is we put out weekly videos on how to basically improve your credit so you can get more business funding, because it's all about business, right? The whole purpose of this channel is really to help business owners. Now, we do give out a lot of information in terms of how to improve your personal credit so you can get better interest rates, so you can apply for your next car loan, and so on. So right, so if you want to use that information to help you get a better interest rate on your next car loan, or whatever, then you can do that as well. But we want to focus really on helping small businesses, entrepreneurs, freelancer, people that are trying to get into business. So if you're in that area, if you're in that niche, then subscribe. YouTube, Facebook, Instagram, My Credit Funding, so you can get all this weekly information and strategy. So let's get into it. So we're talking about small business financing, right? The top 10 sources of financing used during startup. You actually be surprised. A lot of the time, small businesses, when you're starting a small business, we usually, people tap into their savings. So you've been saving for, let's say you've been saving for 5 years, you saved out $50,000 to start a business, right? This is your new business. So that's usually the top, that's the main source of funding when you're starting. You usually tend to go towards, your savings. So let me bring out this stats. It's very interesting because, as I mentioned, small businesses, when you're starting out, that's the main source that you're going to your personal financing, the money that you've saved up to start your business. So let me bring up this quick stats here. So as I was mentioning, as you can see here, right, this was actually done by Stats Canada, right? Stats Canada mentioning so these are the top 10 the top 10 sources of financing used when businesses, especially small businesses, when they're starting their business. So as you can see here on top, right, the graph. So if you look at personal savings, so that's what I was mentioning earlier, right? So personal savings, and we're talking about small and medium-sized entrepreneurs. So this was done in, I believe, in 2006 by Stats Canada. So when you're first starting out business, when you're first starting out you're launching your business, you're looking for capital, and usually most of the time you tend to go towards personal savings. So as you can see here, personal savings is really what more small businesses use. Now, this is in the startup phase. This is not in the expansion phase. This is not in the growth phase. This is the startup. So you're starting your new business. You have a new idea. You have this new, this business idea that you want to put in motion. You've been planning it. You've been thinking about it, but you have no capital. Usually, personal savings is where a lot of businesses usually tend to go. So from personal savings, and then the next step is, personal credit cards, right? So a lot of business owners, a lot of small businesses, when they're starting out, they tend to use their personal credit card to start their business. And then next up, personal loan. They might get a personal loan from friends and family, and then loans from friends and relatives, and then commercial loans and lines of credit. Not as much, because when you're first starting, as I mentioned, you're brand new to business. So a lot of, especially banks, right? They're not going to just give you a $50,000 line of credit just like that, because you're a startup, right? You're new to business. You don't have any track record. You don't have any proof of concept. It's just an idea. So those are the top sources of financing used during startup. Now, one thing that I want to focus on, which is very interesting. So now this is a startup phase. One thing that you want to take a look at here, where it says trade credit from suppliers, right? So trade credit from suppliers is what we call, trade vendors, or trade vendors, net 30 account, and so on. So I'm going to focus on that, right? Because usually a lot of businesses don't tap into that source, that trade credit vendors. So let me move this, and then I'm going to bring myself back here. All right, so I am back. So trade credit, right? So trade credit or trade vendors, let me bring that up. So what is a trade credit, right? So a trade credit is what you call a net 30 account, a net 30 vendor. So what is a net 30 vendor? Well, a net 30 vendor, the way it works is this. A net 30 vendor, so I'm going to bring up this here. So these are some of the net 30 vendors that I can that I was able to well, there's more than that, but these are just to give you an idea what a net 30 vendor is, right? So you have Grand and Toy, you have Canada Computers, you have Staples, you have Uline. So basically the way it works is these. Once you set up a corporate account with these companies, right, Grand and Toy, Canada Computers, Staples, and Uline, what they will do is now they're all different. All right, they all have their terms and condition in terms of how they operate. So don't take my word for it. Do your own research, right? So what they do is right, based on the terms and conditions. So let's say you buy, let's use Uline for example, right? Uline is a don't let's use Staples. Staples sells office supplies, office stores, and supplies. So you set up a corporate account with Staples, right? So net 30, the way it works is this. So you buy the product up front, no cost, so you don't put up any money, right? Staples will ship you. They will ship you those products to your address. You pay no shipping. You pay the shipping fee, but you will not pay the actual inventory or the actual product, right? So let's say you bought, $1,000 worth of office supplies, right? So you pay the shipping fee, but you will not pay the actual total cost of the product. What Staples will then do is they will send you an invoice. So that's what you call a net 30 invoice. They'll send you an invoice that on that invoice, basically you have 30 days for you to pay off that inventory that you just bought, all right, that they sent you. Now, as I mentioned, a lot of these net 30 account or net 30 vendors, in the beginning you'll probably have to establish some sort of a payment history for you to get to that point. So you probably have to buy some stuff, small purchases, and then buy with use your own money, credit card, your own cash, and so on. So you have to build that relationship with them to get to that point. So that's why if you look at the graph here where it says startup, right? So a lot of startup actually they don't use that service until later on when they're growing, because as you can see here in the beginning, not too many businesses actually take advantage of trade credit from suppliers. The reason is because when you're starting out, usually a lot of businesses, they don't really trust you because you're new to business, so you don't have any proof of concept, you don't have any sales, you don't have any clients, you don't have any cash flow coming in. So that's why, as you can see here, trade credit from suppliers is actually low. But if we actually go a little bit lower, if we go down, watch this. Let me bring it up here. So if we go down the same graph, let's see if I can bring it up. Right now, this is a very interesting, right? That's why. Okay, there it is, right there. So let me bring it up a little bit. Right. So the first graph that we looked at, we were looking at, in the startup phase. But then, as you can see here, right, more and more businesses, once they are established, they start using trade credit from vendors a little bit more, right? So you see here, like the first one, the first graph, they were not using it as much, but the second graph, now you can see that trade credit from vendors, from suppliers, they tend to use it more. Why? Usually, when you're in business for 2 years, 3 years, 5 years, you have an established track record. So suppliers now, they trust you, right? You built that relationship with them for the last 3 years, for the last 2 years, and so on. So now they trust you. So now you can actually get what we call in the industry, they call it net 30 account, right? So that's when they send you they invoice you, right? You bought the product from whether it's Canada Computer or Uline or any of these companies. So let's say, for example, Uline, if you have a corporate account, usually Uline is good, because if you have a corporate account, you can set up a corporate account with Uline. So you have to be incorporated. Or Uline is, they also sell furniture, office supplies. They sell a lot of office supply stores. So with Uline, you can actually get net 30 account as long as you're incorporated. So you go on their website, you have to be incorporated. That's the only thing. You have to be incorporated with Uline, Canada Computer, and Staple. Now, some of these, as I mentioned, some of these vendors, you do have to build a relationship with them first before they can trust you enough for them to give you a net 30, a net 40, even a net 60, right? Because what it is a net 30, as I mentioned, is basically all it is that a net 30. What a net 30 is this: you buy something from Canada Computers, you don't pay anything up front. Canada Computer will send you an invoice. On that invoice, you have 30 days for you to pay off that that inventory. So which means within that 30 days, you have 30 days to sell the product, to market the product, make your money back, and then pay back Canada Computer. Same thing with Staples, same thing with Grand and Toy. So that's what you call net 30 account. So that's what I was mentioning in the beginning, in the startup phase. A lot of suppliers, they won't offer you that service, but you want to build that relationship with them in the beginning by buying small quantity of inventory. So if you have a corporate account with Canada Computer, with Grand and Toy, or with Uline, or with U-Haul, there's a lot of net 30 accounts out there. That's why in my previous video I said you can start a business with no money down, but you have to find a supplier that will be able to give you a net 30 account, or they'll be able to give you a net 30 invoicing. Now you have to do your own research. There are a lot of suppliers out there, as I mentioned, right? You have to do your own research, right? Basically, you don't put any capital down. You don't put any no down payment, no money down. You buy the inventory. You just have to pay for the shipping. They ship it to you, and then they'll send you an invoice. You have 30 days for you to pay back that inventory that you bought. So which means within that 30 days, marketing, you're selling, you're getting, you make a profit, and then you pay them back. So in the beginning, as I mentioned, the top 10 sources, right? Usually a lot of businesses, as you can see here, that actually changes, right? So let's bring it back here, right? And as you can see here, once businesses are more established, they start getting more credit, right? From banks, as you can see here, from lines of credit, from commercial banks. So it starts, the financing options opens up a little bit more, right? That's why you want to establish those relationships early with private lenders, right? So as you can see here, let me see if I can go back here. All right, so let's go back, right? So here we go in the startup phase, as you can see here, right? Startup phase, it's more personal, businesses tend to tap into more of their personal savings, right? There you go. There's the graph right there, right? Almost about 90%, right? So businesses in the beginning, when you're starting up, you don't have any money, you tap into your personal saving to get your business started, right? But then when you start establishing yourself now, right, you have some cash flow coming in, you have some products that you've sold, now you have more flexibility. So now you can actually go to the banks to get a line of credit, to get a business loan, and so on. So because now you have a little bit more of a track record, but at the same time, it's more difficult for small businesses to get, let me bring that here. It's more difficult for small businesses to actually get loans and credit from the big bank, just because one of the things is they do look at your personal credit, right? It's based on your personal credit before they can extend you any credit. But one of the things, you can actually take advantage of trade credit, right? Or trade lines, or net 30 vendors, and so on. So, right, trade credit suppliers, you can take advantage of that, because once you build up that relationship with them, as I mentioned, right, some of these trade credit vendors are companies like Grand and Toy, Staples. There's a lot of them out there, right? So these are what you call net 30 account vendors. So Staples, Grand and Toy, Canada Computer. What they will do is they will allow you to set up a corporate account. Now, as I mentioned, some of these have different terms of condition. With Uline, you can actually start your net 30 invoicing right away. You don't have to wait a year. You don't have to wait 2 years. You can actually just, they can start sending you products right away, and then they'll send you an invoice for you to pay them off. Now, with Canada Computers and all the other lenders, it might be a little bit different. You might have to establish that relationship with them first. It could be 6 months relationship. It could be a year relationship. It could be you don't know, but you have to establish that relationship if you want to get into net 30 invoicing. So net 30 invoicing, so you have to look out for that. So if you want to start a business, you don't have any money, you don't have any capital, look out for vendors that offer net 30 account, that offer net 30 invoicing, where you can buy the product up front. You don't pay any upfront fees or anything. You just pay for the shipping. They will ship you the item at the address that you have chosen. Once you get your item, they will send you the invoice and they will tell you, okay, you have 30 days from now, for you. So that's why it's called net 30. You have 30 days from the time you get the invoice, just like a credit card, right? You buy something, you have 30 days for you to pay off that credit card. What net 30 invoicing is the same thing. You just have to find a supplier that will be willing, not actually willing. All suppliers are willing to extend you that net 30, but depending on the supplier, as I mentioned, you have to build that relationship with them. As I mentioned with U-Haul, right? U-Haul, you can actually, they will start the process right away. You can, as long as you're incorporated, you have your corporate account, we set up in a corporate account with them, you're incorporated, you can start, they can start giving you net 30 invoicing right away. The other vendors, as I said, you might have to build that relationship with them first before they can extend you that credit. So those are the top 10 sources of financing used during startup, right? Personal loans, personal savings in the beginning, as I mentioned, as you can see here, a lot of businesses, that's what they do. They tap into their personal savings and so on. So, right. And then as they get more established, they start, because by that time they have a little bit more of cash flow, right? They're going to banks to get more loans. Okay, let me bring it up here. Let's see if I can bring that up a little bit more. All right. So there we go. In the beginning, businesses usually, as small entrepreneur that are starting up in business, they usually tap into their personal savings, right? Banks are not going to give you a loan because you have no proof of concept. Your business has no track record, it has no client, it has no cash flow. It's a new, it's a new project. So you're going to tap into your personal savings and, but as you grow, you see that the source of financing actually changes. Now it's more dependent on commercial lines of credit and commercial loans, right? And then also trade credit suppliers. So that's why you want to understand what a trade credit supplier is, or a net 30 vendor, because a net 30 vendor can help your business grow, especially if you're in the business where you're buying inventory, because when you buy inventory, you need a supplier, right? A supplier, right? You're buying inventory from a supplier. That's why you want to be able to talk to your supplier to see if they offer net 30 account, right? Ask them, hey, you know what? I'm incorporated. Can you offer me a net 30? Can you offer me a net 60 and so on? So that way it gives you a little bit more time. So you don't have to pay for the item up front. You get the item, you sell it, you make a profit, and then you pay back the vendor, and then you just continue the process. So that's why trade credit from supplier becomes an alternative source of financing for small businesses if they cannot get access to capital from banks, right? And as I mentioned, right, there is a lot of these suppliers out there that you want to be, that you want to look out for. But all in all, to say is that there are a lot of funding that's available. You just have to tap into it. You just have to know the source of it. You just have to know who's who in this lending industry, who's lending, who's financing what. So that's why you want to subscribe to our channel, My Credit Funding, YouTube, Instagram, Facebook, so that you can get weekly strategy, weekly information on which vendor or which financial institution is actually lending, right? Credit unions, whether it's the credit union, whether it's the big banks, whether it's private lender, and so on. So if you're in the market for loan, like right now, the CEBA, Canada Emergency Business Account, has just been extended until October 31st. Well, that's also another source of financing that you can tap into. So you can look into that. So there's a lot of sources of financing that's out there. You just have to choose where you fit in, right? Are you looking for lines of credit? Are you looking for operating funding? Are you looking for startup funding? Are you looking for expansion funding? What kind of funding are you? That's what you have to ask yourself, right? What kind of funding are you looking for? Is it startup funding that you're looking for, right? Because if you need startup funding, right, you probably just need some credit cards to get your domain up and running, get your website up and running, do some marketing, some Facebook ads, some Instagram ads to get you up and running. So that's all. You may just need a credit card. Are you looking for expansion? Are you looking to buy inventory? So if you're looking for inventory, you might have to look into lines of credit and so on. So, right, if you're looking to buy a property, then you might have to look into commercial loans. So you have to ask yourself, what kind of funding does my business need? And what stage of business are you in? Are you in the startup phase? Are you in the growth phase? Are you in expansion phase? What kind of funding? Because not every funding will fit the phase that you're in, right? Because if you're expanding, then you don't really need credit card. May not do it for you, because credit card is short term. Credit card is, you use it 30 days, you got to pay that off, right? If you're expanding, you might want to look into a long-term loan. If you're buying if you're buying properties, if you're buying commercial real estate, right? If you're just starting up, where you just need to build a website, or you just need to do some online marketing, you don't need a $10,000 loan. You probably just need a $5,000 credit card, because it's a short term, right? Because you use it to do your Facebook ads, you use it to do your marketing, and then you pay it off. So you have to understand, as a small business owner, as an entrepreneur, if you're trying to get into business, what kind of funding do I need for my business, right? Do I have my own personal savings? Have I saved up money for me to start this business, right? Most of the time, as I mentioned from the graph, a lot of businesses, that's how they start. They start from their personal savings, but then as they expand, they realize that they need more capital, right? So that's why you have to ask yourself, maybe right now you just need your personal saving. Maybe you have a little bit of money you've saved up. Maybe you can use that to start your business. But then once your business starts getting a little bit more traction, you might need to do more marketing. You might need to do more advertising. You might need to do more ads and so on. So at that point, you might want to get into getting a business credit card, because a business credit card has its advantages, whereby you pay for the advertising, and then once you get your profit back, you pay back that that business credit card. So understand what phase you're in and what funding financing you need, because there's different types of financing. Not every financing suits every businesses. So you, as a business owner, have to sit down and analyze, okay, what kind of financing do I need? So subscribe to our channel: Instagram, My Credit Funding; Facebook, My Credit Funding; YouTube, My Credit Funding, so you can get these weekly information on business marketing, business financing, business funding, so you can understand how funding works, because it's very important that you understand the different types of funding that banks are offering and how you can use it based on what stage you are in business. As we mentioned, you might be in the startup phase, and in the startup phase is right, you just need some marketing, to buy some inventory and so on. So understand, what kind of financing you need, and subscribe to My Credit Funding. We'll continue to give you some weekly information so that you can continue to grow your business. So until then, we will see you then.